Monday, June 28th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at why, in my opinion, the Fed's balance sheet and other central banks' balance sheet for that matter are telling me that we are on the cusp of the crack-up boom. And I'm going to quickly reference Human Action by Ludwig von Mises about the crack-up boom so you understand what it means. And generally speaking, I think the crack-up boom means that central bankers are trying to run away from reality. They're trying to keep interest rates artificially low. They're trying to keep the credit boom going. And they go so far that they can't stop. So reality is a police patrol car, and the central bankers are a speeding car, the white Bronco, so to speak, O.J. Simpson, driving away from reality. Eventually, reality will catch up. That car will crash, crack up boom, or that car will stop, credit collapse. I personally think, we are on the way to a big crash. When the crash will happen is difficult to say. They've been driving this car for a long time. They're used to it, but it will end in tears. And that's basically what the crack-up boom is. And it's the major central banks of the West, of course, Western world, so to speak. You've got the Federal Reserve, you've got the ECB and the Bank of Japan. Those are the big boys, so to speak. Bank of England as well, of course. Bank of England has done almost $1.5 trillion equivalent in QE the last few years. They're smaller, of course, but they're part of this as well. And I have a feeling we're getting very close to that point. But the danger if they keep going, and he talks about that, is here on page 4 to 7, and I'll just quickly go through it. It says, but if once public opinion is convinced that the increase in the quantity of money will continue and never come to an end, and that consequently the prices of all commodities and services will not cease to rise, everybody becomes eager to buy as much as possible and to restrict his cash holding to a minimum size. For under these circumstances, the regular costs incurred by holding cash are increased by the losses caused by the progressive fall in the purchasing power. The advantages of holding cash must be paid for by sacrifices which are deemed unreasonably burdensome. This phenomenon was in the great European inflations of the 20s called flight into real goods, Flucht in die Sachwerte or crack-up boom, or Katastrophenhalse. The mathematical economists are at a loss to comprehend the causal relation between the increase in the quantity of money and what they call velocity of circulation. The characteristic mark of this phenomenon is that the increase in the quantity of money causes a fall in the demand for money. The tendency toward a fall in purchasing power as generated by the increased supply of money is intensified by the general propensity to restrict cash holdings, which it brings about. Eventually, a point is reached where the prices at which people would be prepared to part with real goods discount at such an extent the expected progress in the fall of purchasing power that nobody has a sufficient amount of cash at hand to pay them. The monetary system breaks down all transactions in the money concern sees. A panic makes its purchasing power vanish altogether. People return either to barter or to the use of another kind of money, well, gold or silver. So I think if you look here at the balance sheet of the Federal Reserve, And look at what they did after the '08 crisis. Yes, it was a big increase. It jumped, but they kept it pretty relatively level up until 2013. Yes, they increased it again, and they're trying to bring it down. And of course, it didn't work. Back in 2018, 2019, they had to start again. But look at how it's getting out of control now. I would say the little bump we had at the end of the big increase last year is similar to the bump we had at the end of 2008, and then they moderated the increase. But now they're just continuing to expand the money supply, their balance sheets, and we've seen that M2 is continuing to grow at a very fast clip of about 15% per annum, the last M2 numbers. I calculated in the last month, the Fed's balance sheet is increased at a rate of 30% per annum. So M2 is like increasing at half the pace, of course, of the Fed's balance sheet. And of course, it's not just the Federal Reserve that is doing this. Look at all the other major central banks here. You've got the Fed, the red line. You've got the ECB, which is even worse, the BOJ, and the People's Bank of China. So as I said, I think we have gone past where we can stop this crack-up boom. The only way to stop it, of course, is to bring the whole system down by stopping the expansion of the money supply, raising interest rates. But that's politically impossible to do, I would say. And commodities, of course, have been a big factor this year in people talking about inflation, and there's a lot of people, especially the central bankers and the mainstream economists, who think that this is all transitory, temporary, and that commodities are going to come back down. And commodities, of course, are very important because they're hard assets, and they're a big part of this crack-up boom. And I've said before that markets don't go up in a straight line or go down in a straight line. They take breathers. And you can see here, Tavi Costas put this chart of commodities, and I agree with him. He says, what if I told you that the only transitory move we had was the recent sell-off in commodity prices? The hoarding of tangible assets is far from over. And I agree with him. So we need to keep an eye on commodities. That is going to show us that the crack-up boom is evolving. When it's going to happen, when we're going to have the final collapse of the fiat currency is difficult to say. But it's not a linear event. It's like a phase transition event. It happens very quickly. They're playing a very dangerous game. The central bankers and the bankers, of course, they're really driving that monetary runaway car at a very fast speed. And there's a big danger that it will crash. They still have the choice to stop it, but then the whole game would end. The whole system would implode. But it will end as well when they crash. And that's what the crack-up boom is all about. Yes, there will be a deflationary collapse, but not before there's either a crack-up boom or they bring the whole system down. And that's why you want to have real money, as von Mises says, because the fiduciary money will disappear. And what we think is worth a lot these days will not be worth much, i.e. paper assets. So with that, let's quickly look at where the markets are this morning. It's 8:36 a.m. London time. We've got spot gold at 1783.30, up a couple of dollars. High has been 1786, the low 1770. Spot silver is up 6 cents at 26.17, up 0.25%. The high has been 26.25 and the low 25.77. Basel III day today. I don't expect much to happen today. it's just the EU banks or Eurozone banks. And as I've said many times in the past, and I said yesterday in my live stream, just keep an eye on the fundamentals. The fact that we've got this outrageous increase in the money supply orchestrated by the central bankers, that's what matters. The Dow futures up 30, the NASDAQ 100 futures up 40 points, S&P is up just under 6 points. The fiat currencies, we've got sterling up 1/3% at 139.27. We've got the euro at 119.40, unchanged. The dollar is down slightly versus the yen at 110.65. Dollars unchanged versus the yuan at 6.46. The Aussie dollar is at 75.93, just below 76. So the Aussie dollar is a good indicator of commodity prices as well. Recently, we've been as high as almost 78. We dropped below 75 in the last week or so after the big correction in commodities after the FOMC meeting. But now it seems like the Aussie dollar is picking up. So that's a sign to me that the commodities markets are starting to maybe rebound a little bit. The general commodities, we'll have to see. WTI crude is at 73.90. That's basically unchanged overnight. It has been as high as 74.27. So oil as well continues to go higher. High-grade copper trading just below 430, unchanged overnight. And of course, the market that the central bankers are trying to basically hide from reality, the bond market, the 10-year note, of course, should be a lot higher. It should be at least 6-7%. Yes, the Keynesians and the mainstream economists, the central bankers, they give you all these excuses about demographics and excess savings. But in my opinion, it's all got to do with the central bankers' balance sheet and the central bankers being the major buyers of treasuries and other government bonds. So the 10-year note is down 2 basis points this morning at 152. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And if you do, make sure you click that little notification bell to be notified of all my new videos. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below. I wish you all a great day. Take care. Bye.